Good day to you all, wherever you're watching this video. My name is Adesian Z-Man, the founder of 3D Strategy. Now you might be asking, what do I mean by 3D? 3D means three directions. We have direction 1, which is D1, direction 2, which is D2, and direction 3, which is D3. All these 3Ds are what we will use to anticipate the next price move, or the next candle move. So, if you're new to this channel, please subscribe so you get notified when the next video drops. And don't forget to hit the like button. Thank you. Alright, let's get started. What does this 3D strategy actually look like? Here's a big picture of it, but we will get there step by step. I just wanted to show you what it looks like first. And for those of you who are beginners, I'm going to start this tutorial from the very basics. Now, let's get started. In Forex trading, price moves in three ways: an uptrend, a downtrend, and sometimes price is also consolidating, which means it's in a range or moving sideways. But in this picture on the screen, I'm only showing the up direction move and the down direction move. In an uptrend, we have something we call higher highs and higher lows. This tells us that price is moving to the upside direction. And in a downtrend, we have something we call lower lows and lower highs. This tells us that price is moving to the downside direction. Here's how price consolidates, or goes into a range. What do I mean by price ranging or consolidating? It means price is not showing any clear upside move or downside move. It's just moving sideways. And this is where many traders lose money to the market. Now, for you beginners, I'm going to show you a simple drawing of how price moves in an uptrend and a downtrend. Let's start with the uptrend first. When price pushes up, we call it a higher high. This higher high is what we call an impulse move. When price drops down a little bit, we call it a higher low. This higher low is what we call a pullback or a retracement. Now, the next push up breaks through the previous higher high. This forms a new higher high. That level that was broken, that previous high, is what some traders call BOS, which means break of structure. But in 3D strategy, we call it D1. Then the next price move drops down a little bit and forms a new higher low. And then price pushes up again, breaks through the previous high, and forms another new higher high. At the same time, another new BOS or D1 also forms. That's exactly how price moves in an up direction. Alright, now let's see how price moves in a downtrend. When price drops down, we call it a lower low. This lower low is what we call an impulse move. When price moves up a little bit, we call it a lower high. This lower high is what we call a pullback or a retracement. Now, the next drop down breaks through the previous lower low. This forms a new lower low. That level that was broken, that previous low, is what some traders call BOS, which means break of structure. But in 3D strategy, we call it D1. Then the next price move pushes up a little bit and forms a new lower high. And then price drops down again, breaks through the previous low, and forms another new lower low. At the same time, another new BOS or D1 also forms. That's exactly how price moves in a down direction. Now I'm very sure that we know the difference between an uptrend and a downtrend. This is an uptrend, and this is a downtrend. Now, let me explain how we can anticipate the next price move using this simple drawing. Let's start with the uptrend. In an uptrend, when price breaks through the previous high and forms a new higher high, a new BOS or D1 also forms at the same time. So, to anticipate the next move, you need to wait for price to pull back. For example, look at the red arrow pointing to the previous D1. When that D1 formed a higher high, price pulled back a little bit before the next impulse broke through the previous high. Now that a new D1 has formed, that means the previous D1 has already been used, and it's no longer valid again. What we do now is to be expecting this new D1 to repeat what happened in the previous D1. Ask yourself this question: what happened in that previous D1 direction? The answer is, the price direction was up, and we anticipated price to go up. So we wait for the pullback from this new higher high. Inside this pullback is where we are going to find and confirm our D2 and D3, before the next impulse move flies up. Once that impulse breaks through the high, another new D1 will form. And the cycle continues. For the downtrend, Look at the blue arrow pointing to the D1. That's the new downside D1. Wait for the pullback from this new lower low. Inside this pullback is where we are going to find and confirm our D2 and D3, before the next impulse move drops down. Once that impulse breaks through the low, another new D1 will form. And the cycle continues. Now the question is, how does this BOS or D1 actually look like in real candle formation? Because on the drawing it looks very simple. In 3D strategy, the minimum candle formation for direction 1, which is D1, starts from at least 3 candles or more. That means 3 candles is good enough to qualify as a direction. Here's how it looks in an up direction. As you can see, they are not all printed the same way. Pause this video and study it very well. On the chart, the market prints candlesticks in many different forms. Your job is to use your strategy and logic to see it the same way by training your eyes. I'm going to explain in detail in the next video so your eyes can get trained. Now, this is how it also looks in a down direction. Pause this video again and study it very well. This is part 1. As a beginner, watch and re-watch this video again and again for better understanding. In part 2 of this video, I'm going to explain in more detail how to identify the right candles for direction 1, which is D1. Please don't forget to subscribe to this channel and turn on your notifications so you get notified when the next video drops. My name is Adesian Z Man once again. Thank you for watching.